Yes, ladies and gentlemen, the closing bell, another day, another record, actually two records today, as we alluded to in the previous segment. The Dow up 23 to close at 1853, and the S&P up almost 7 at 2,088. The Nasdaq also up 33. And joining us now is Ed Butowsky. He's renowned wealth manager and managing partner of Chapwood Capital Investment Management. Good to see you, sir.
Nice to see you.
Thanks
for
coming
having
in.
me.
My pleasure. All right, so we're coming to the end of a crazy year.
Yeah.
But it's the Christmas, the Santa Claus rally, as they call it.
Right.
What could we look for next year? I'm reading and seeing things that the gains will be given back. It's not going to be all that great next year for various reasons, but the GDP looks good. You know, the media would have you believe that the whole economy is just floating on air.
Yeah, well, there's a separation, Steve, as you know, between the economy and the stock market. And, you know, what people have to understand is nobody can tell you exactly what's going to happen next year. So you have to think, you know, do I believe that earnings are going to come in strong? Because remember, stocks have moved up 6 to 9 months ahead of economic earnings or, you know, data that comes out. So if you believe those earnings that are forecasted are going to be achieved, then you buy this market and you don't worry about a thing. However, about 50% of the growth in the S&P 500 companies come from outside the United States. So if you want to pay attention to Japan, the slowing of China, the possible deterioration of the banking system in Europe, if those things scare you, then you don't go into this market blind.
And you're talking about the next quarter or corporate earnings
Right.
reports. How about the fact that not a lot of companies have dampened expectations for the next quarter's earnings?
Well, it's going to start. I mean, you will see earnings revisions. That's what everyone has to know. It's not stocks have already moved up, and now if you start seeing earnings revisions, those stocks will start to fall back a little bit. Now, do I think that's going to happen? I do. Now, I seem to be out of the mainstay, you know, or mainstream, excuse me, but I actually think I'm really going to be right. Okay, this past year I was a big believer in utilities. I still am because they're insulated from world economic conditions. Same thing with the United States banking system. All right, so the United States banks and utilities are places that I would allocate money right now for next year. But I'm not saying stay out of the market. But the question is, do you think those earnings are going to be hurt by these geopolitical issues? And if so, be careful.
All right, and it's funny. It just struck me when you said utilities and banks, and of course, our two most vulnerable areas, if God forbid there's a cyber attack, which
right.
of course, in that case all bets are off anyway.
Right.
But someone in your position who does what you do, how often do you concern yourself with the fact that they could take down our whole financial system?
I don't think too much about that. If it happens, you know, we're all going to, you know, have a problem in that respect. But I do look at the overall picture of the world economy. I can't look at it and say, well, if this, you know, if this terroristic activity occurs, I have to manage money accordingly. But I'm always being cautious. I'm only about 50% invested in the equity markets. We manage a lot of money at my firm, and we know that we have a huge responsibility. Any financial advisor who does not sit down and explain the possible negative consequences of these geopolitical events is basically committing, you know, for the most part, malpractice. Nobody should be 100% invested in the equity markets, nor 80% invested in that equity market.
And of course, it all depends on where you are also along the life path. That's a big ingredient into helping you decide what to do. But oil,
right?
We've seen it, you know, go from June to now. I read where OPEC will draw the line, whatever that means, if it gets to 40. Where are we headed with oil?
Oil's going to go higher from here. I'm going to make a strong, you know, opinion here. The Saudis have created a lot more oil into the marketplace. You know, some people say that they did that to hurt Russia, which is great in my mind. But they also have a lot of things that they do in their country to support their people, their citizens, and they can't really survive. Or they can survive, but it hurts them to be this low. I would think that you're going to see oil up above $70. And there's actually an ETF. I got to give a disclaimer that I don't own it, but there are ETFs that simply invest in the energy market. Direxion has one that is a leveraged one. I'm actually looking at that now. I would be a big buyer of oil right now.
Are you going to get your Apple Watch next year? I know you're not a big supporter of Apple.
The only thing about Apple is this.
We only have 10 seconds. Go ahead, yeah.
If you think it's going to grow 20% next year, buy it. If you don't, sell it.
Okay. Ed Butowsky, ladies and gentlemen, Happy New Year. Merry Christmas. Thanks for coming in.
You.
Up next, ladies and gentlemen, it's Gimme 5. It's coming your way right here on Newsmax Television, The Steve Malzberg Show. Don't miss it.